Hello, this is Sherrell T. Martin with Empower to Thrive, where we empower to thrive financially in life and in business. And this week's tip is on cash versus accrual accounting. So, which one do you use? So this is the thing. Over the past few months, as I've gained a few new clients, they are confused about which method they should use and why. So here's the nitty-gritty. Cash basis means that you recognize income when you receive it, and you recognize expenses when you pay them out the door. Accrual basis is you recognize income when you have the right to receive it, and you recognize expenses when you are obligated to pay it at that point. So, for example, with cash basis, if you are just take an event planner, for example. If you're an event planner, you recognize income when you receive payment from the hostess, and then you recognize expenses as they are paid. With the accrual method, you recognize income when you have the right to earn it, and you recognize expenses when you have the right to pay it. So you recognize the income as soon as that event is done, when that job is complete, when that project is over, when that event is a wrap. That's when you recognize it. With the expenses, you deduct them when you're obligated to pay them. So all those expenses that you got, I don't want to say charged, but say you got them on account. You didn't have to pay, you didn't charge it on a card, but the vendor allowed you to use their product or item without having to pay them yet. Well, you are obligated to record those expenses as bills that are due at that point in time on an accrual basis method. So cash versus accrual is key when you're trying to understand your cash flow management and get a handle on it, and when you're dealing with your taxes. So here's the thing. With taxes, for example, as I said before, you recognize cash when you receive it for cash basis, and expenses when it's due, which means when you don't have to pay taxes on monies that you have not yet received in the door. That's a yay, right? Yay! But the downside is you can't deduct expenses that you have not yet paid. So in the previous example where I said you received some items or products on account, but you haven't paid those vendors yet in any way, shape, or form, you haven't given them cash, you haven't given them checks, you haven't charged it, then you cannot deduct those expenses. When That means you got to pay more taxes. On the accrual method, though, you recognize the income when you have the right to receive it, and the expenses when you're obligated to pay it. So those expenses could be deducted then, because at that point in time you are obligated to pay that money out the door. So that's our tip for the day. Cash versus accrual method. So I hope that helped you. So let me know what method of accounting do you use and why, and do you fully understand it? And if not, I would recommend that you consult with your tax accountant or your CPA or your bookkeeper or accountant and try to understand and make sure that you clearly understand the difference between the two and which method is best for you in your business. Did you like this video? If so, please subscribe so that you can receive tips like this every single week, and share it with your friends, fans, and followers so that they too can also benefit. And don't forget to visit us on www.empowertothrive2.com so that you can get our free startup success guide and our bonus budgeting checklist. Ding, I said it. So now remember, in order to thrive financially in life and in business, you must push past your fears, excel in your ability, and soar to new heights. I look forward to talking to you next week. Take care and be empowered.